Dr. Benjamin F. Chavis Jr., and this is how to get your money right. Peter Gibbs, you're president and CEO of Foundation Surety and Insurance Solutions.
Yes, sir.
Based in Maryland.
Yes, sir.
All right, well, tell us about your background. Where were you born?
I was born in Trinidad and Tobago, and the first 11 years of my life was in the Caribbean. And then my mother, who had been to the U.S. About 9 or 10 years before bringing the kids, so at age 11, came to Brooklyn, New York.
That's a big cultural change.
Yeah, it was.
Well, I understand now you're one of the best in America getting African-American owned business and other businesses bonding.
Yes.
I don't know too many brothers or sisters in the bonding arena.
Right.
Tell us, what is a bond? Why does a business need a bond?
So I'll give you a background. So, the last couple of years when you watch the news, you always hear about the infrastructure bill.
Yes.
Right?
Major,
yes,
multi-billion-dollar opportunity.
$1 trillion in contracts all over the U.S. As a bonding guy, I want to throw something at the TV because no one is saying that before you can get those contracts, you have to have what's called a surety bond, right? And a surety bond is basically a three-party agreement, right, between the contractor, the surety company, and the owner. And what it does, it makes sure that the contract is completed based on the terms of the contract, right? So it's probably the most important thing for construction companies to be able to get contract surety bonds. But it's probably the biggest obstacles for minority businesses, especially in the underserved market. And I think it's a problem because too many companies, they don't understand the importance of being bondable, which means that you have to do all those things that a small business should do, like having, financial statements, keeping record of the jobs that you've done, having experienced people. All these things matter because at some point, regardless of how you get that job, the owner is going to ask you for a surety bond, right? One step further, every contract in the federal government, and I'm focusing on the construction industry, if it's $100,000 or more, it requires a bond. It is the law, right? So you can't go around that. And although it's not in the law, it's not the law at the federal, at the city, state, and county levels. They all mirror this, even in the private sector. So if you're a contractor, every time you get a contract, it's most likely going to say you need to have a bid, payment, or performance bond. Right. And if you can't get it, they're going to give you 5 to 10 days to get that bond. And if you can't get it, you're going to lose the contract. That's how important the surety bonds are.
There are numerous African-American and other leaders from communities of color who are contractors, but they are never really have an opportunity to get these federal contracts. And you've pointed out one of the challenges,
right? Bonding.
So is that what you do now?
Yes. So I worked for SBA for 32 years. In the past 18 years, I was the director for the Office of Surety Guarantees. It is it's a program at the SBA. When people think of SBA, they think of loans, right? But there's also another program. It's a couple other programs, but the bond guarantee program gets appropriated $6 billion annually, and it's a partnership between Treasury-listed surety companies. And the whole objective of the program is to help businesses who are having difficulties in the bonding market. Even though I was in charge of the $6 billion program, there was still an issue for minorities, especially companies in the underserved market, who were not getting bonding, right? Because I would speak all over the country and I would speak to small businesses, and it was still an obstacle. So I figure, why not go out there and do it my own, right? So we've been in business for, October will be 3 years. We've got over 400 clients nationwide. So
Wait, in 3 years,
in 3 years,
you have over 400 clients.
over 400 clients.
Man, you got a growing business.
Yeah, we're trying to help these small businesses, but it's a problem because this is not put out in the forefront to small businesses, especially the ones who need bonding, the requirements. They want to own a construction company, but no one is telling them, you have to be able to get bonds to get projects. And then there's a lot of misinformation out there. For example, whenever I go to events, I always hear companies or people, especially government officials, they say joint venture with someone, right? I'm totally against joint venturing because that seems to be an easy thing to do or say, because when two small businesses come together to get larger contracts, number one, economically it doesn't make sense, right? Because the average profit on a construction project is 14%, right? Now, if I joint venture with Chavis Construction Company, now in the best of situations it's 7-7.
Right.
But I'll say, Brother Chavis, I got this job, so I'm gonna do 10, I'm gonna give you 4. So economically it doesn't make sense. And then the other part of it where it doesn't make sense is that it's very difficult for two small businesses who joint venture to be bonded in the marketplace.
Well, that's why we have you on the program. We want you to talk about what makes sense.
Right.
And as I travel around the country, I noticed that another definition of joint ventures, you have a small minority company with joint venture with a larger company. But the minority company is always the subcontractor.
Right.
They're not the prime contractor.
Right.
Can you explain the difference between a subcontractor and a prime contractor?
Yeah.
Particularly when it comes to federal grants.
Yeah, so basically you're gonna have the general contractor who goes after the entire contract. And within that contract, there are different parts of that contract. It could be drywall, it could be HVAC, it could be mechanical. And that general contractor will hire, subs to do that part of the contract. So now what you said earlier about the larger and the smaller company, I think in those cases it's more of a mentor-protege situation, right? Which is good. But the point I try to tell small businesses is, whether it's a mentor protege, whatever it is, you should have an exit strategy so that you can get out there on your own to do this stuff, by yourself. For us, the companies that we work with, we tell them, we're gonna meet you where you are. We want you to grow responsibly on your own. And more importantly, we want you to be selfish with your experience, right? Because what happens is when you got all these other people involved in what you're doing, you're missing out on very important experiences that you need to gain on your own if you're going to have a long-lasting company.
Can you just give a little bit more understanding of why major contracts require bonding?
It requires bonding because you don't want, if you're the owner of this building that you want to renovate, right? You want to make sure that whoever is doing that work is, number one, qualified technically to build a building. Second, that they have, the financial capability to do it, right? And number three, that there's someone of good character, right? Because you, at the end of the day, you want to make sure that your project is completed and there are no issues. So that's why bonds are required and needed. From the federal perspective, they're saving money because if their project is not done properly without a bond, they would have to do it all over again and probably pay twice the amount, right? So that's the importance of the surety bonds. I tell companies, every opportunity that you have to get a bond to increase the capacity of your company, that's what you have to do. Don't go onto someone else's bond so they can meet the goals of a city or state, and then your company is not really benefiting.
Some of the minority contractors I know, not here in where you have your company, but across the country, they just like throw their hands up because there's the appearance of racial disparity. There's probably the fact of some discrimination. There's redlining in banking. There's redlining in housing. Talk to us about redlining in bonding.
Well, and that's why we're here. I think we are the solution for that, because, what I tell people, you put on the TV at night, you won't see a commercial for surety bonds, right? Because every project in America, when you drive through D.C., Maryland, California, whoever is doing that construction project, they had to get a bond. So it's hard to find people who want to roll their sleeves up and work with these minority contractors to get them to be bondable. And that's what we bring to the table. Not only do we do that, but we're utilizing the SBA bond guarantee. Now, the SBA bond guarantee program says they partner with Treasury-listed surety companies, and SBA tells those companies, in the event of a default, SBA is going to pay 80 to 90% of that loss, right? So for us, from a perspective of trying to bond these small businesses, whatever they qualify for in the standard market, when I utilize the bond guarantee program, I could double their capacity, right? So I do agree with you that there might be some issues, but I think it's because there are not that many, minority-owned surety agencies. I mean, we're the only one that has a national footprint, and then there are a few scattered around the country that I deal with.
Do they teach this in business schools? I mean, why do so many people go out and start businesses without bonds?
Yeah, no, it's not taught in business school. Even when you take the test to be an agent, there may be 2 questions to get a P&C license. There might be 2 questions about bonding.
What's a P&C?
A property and casualty license. In order to be an agent, you have to have a property and casualty license. So it's something that's many people don't know about. But if you want to be in the construction business, you better know about it, and you better understand, what does someone like me, what do I look for in a company to determine whether they qualify for a bond or not?
And if the company is not qualified, can you help the company become qualified?
Absolutely, that's what we do. We sit down with companies and I have a conversation with them, and I tell them my philosophy and how I do things. And like I said, we meet them where they are. I'll tell you one quick story. A young gentleman came to me, and he had a contract for about $650,000. He just wasn't ready. He didn't have his financials together. He didn't have any money in the bank. So I told him, I said, this is what I want you to do. I want you to go out there and be a sub to someone for 2 or 3 jobs and come back, and keep the money in your company and come back. And about 2 to 3 months ago, he came back. He had a financial statement. He did like 3 subcontracts. And I was able to give him what's called a bonding program. I said, based on his financials, now you can go after projects at $1 million single and $3 million aggregate. So now he's on his way.
So as I listen to you, you take a small business and it can become a much larger business.
Absolutely.
To the extent to which they get the bonding.
Yes.
Peter, sounds like you need a bonding school. You need to teach this, man. I know you're the only company that does it right now. You don't want to create your competition, but I think it's so vital. Even after the infrastructure bill passed the Congress, billions of dollars are going out, some to states, some to local communities, some to corporations who may bid on the contracts. But as I look across the landscape of the United States, we are grossly missing construction opportunities.
Absolutely.
And other government contract opportunities. If you go to any major city, you see cranes.
Absolutely.
Everybody's building. All the repairs of the bridges. And, but very often, as you pointed out, you don't find minority contractors who can even qualify to participate in those contracts.
And, it's what you said is very valid. So, we do a lot of training. Every opportunity to speak on a webinar or at a conference, we're always out there trying to get in front of minority contractors to let them know the importance of bonding. One of the biggest issues that small minority contractors the trap that they fall into. Let's say Chavis Construction Company is awarded a $10 million contract, and you got the contract from DC, and DC says that there's a goal of 40% minority, right? So now you have to get 40% of subs to meet that goal. So you come to me, you say, Gibbs Construction, I want you to do this part of the project, right? Now I can't get bonding. So what Chavis Construction says is, you can just fall under my bond, right? This is the trap that small businesses fall into all the time. They go under someone else's bond, and they'll work with that company for 3, 4, 5 years. And then, they know that they've been doing projects at $750, $1 million. But now that relationship is severed, good, bad, or indifferent, right? So now they're like, well, I'm going to go get bonding on my own. So now I go to a bonding company, and they're going to ask me to fill out this form called a contractor's questionnaire. They're going to say, what's the largest bonded job that you did? The answer is 0, because I went under
somebody else's bond.
So whenever I speak, I tell companies, every opportunity that you have to get a bond to increase the capacity of your company, that's what you have to do. Don't go under someone else's bond so they can meet the goals of a city or state, and then your company is not really benefiting from doing that project because.
Well, I know a lot of young entrepreneurs who are in the construction industry are going to benefit from what you're saying, because normally when a young person or someone for a second career gets into the construction, they're so glad to get an opportunity.
Right.
And if somebody says, oh, you can come under my bond,
Yep.
They don't realize the inherent contradiction in doing
Right, right. And I understand that, you're a small business, you might be on this is your first opportunity, maybe going to someone else. I understand, like, sometimes you may not be in a position not to get your own bond, but don't let that be, how you run your business, being under someone else's bond, right? Because the biggest issue, they say, well, I got to pay for it. Bonding there's a cost to bonding, but the owner has to pay you for that, right? So when you get a project, and let's say the cost is 3%, you put that in your bid, that's included in your first pay application. So the cost is passed on to the owner. So that should not be a reason why you don't get bonded, whether you're a subcontractor or not. Regardless of how small your contract is, it's an opportunity for you to get other projects based on your work. So when you use that as a networking opportunity to get to know whoever the contracting officer is, so that you can start building a relationship and they see your work, and that's how you get into the door.
There's a lot of contracts out there in the defense and the military, not only domestic, but internationally. What would you recommend to people who would want to get some of those military contracts?
I always go back to having strong relationships, because
building relationships
within those agencies, knowing the contracting officer. I tell, when I give my speeches, I tell contractors, don't be a contractor who sneaks in and sneak out, right? If regardless of how small your contract is, you could have a $50,000 contract at a military base. It's an opportunity for you to get other projects based on your work. So when you use that as a networking opportunity to get to know whoever the contracting officer is, so that you can start building a relationship and they see your work, and that's how you get into the door. I know that it's not easy for small businesses to get projects, especially at the national level, But I think that if we start building relationships, start showing up at the right events, the events that I go to, I rarely see African Americans at these events because there's a cost to go to it. I would say, go to the SAMI event, go to the 8A conference event, and start building relationships that way.
From those successful business people that you have interfaced with, tell me 3 things, if you can have them, that you would recommend to up-and-coming entrepreneurs.
The number one thing that I tell to any business person, and that is, you have to have a passion for whatever you do. That's number one. The second thing is you have to build strong relationships. And then the third
Now,
thing...
on that, strong relationships, you mean introducing yourself, going out to the golf course? Tell us how relationships built.
I'm gonna give you an example. I was the director of the Office of Surety Guarantees at SBA.
Okay.
And I was in that program for 18 years. I was probably the head of it for like 14 years. Not one time did an African American come visit me in my office in DC.
In 18 years?
In 18 years. I would have people who are not African Americans. They would meet me, they would call me on the phone, fly from California, and then come to us to tell us, hey, I think you should do this to the program. This is not working.
Why don't we see more entrepreneurs, business contractors of color at that level of the contracting business?
That's a good question. I think a lot of it has to do is with their capacity, how they're growing their business. Again, back to what kind of relationships they have.
Right.
If you're a minority construction organization and you're not regularly featuring a bonding agent or someone who can get a contractor a loan, then what are you doing?
Right.
But since being on this side, that's probably been the most disappointing part of us having our own company, is getting in front of these minority construction organizations.
Yes.
To help them, get bonding.
You first said passion, relationship building. What's number 3?
I would say consistency. Be consistent. Whatever you're doing, for us, that's for me, I'm consistent. Even in the downtime, I'm still consistent because I feel that it all levels out in the end.
It's interesting that you say number 3, consistency.
Mm-hmm.
I noticed that people who've been in the armed services, people who've been in the military,
Mm-hmm.
have that discipline of consistency.
Mm-hmm.
How has your military experience helped to inform what you do today?
I give so much credit to the military who shaped me as a young person. I was, growing up in Brooklyn, New York, and going on a college campus, and probably was not the most disciplined person at that time. And after joining ROTC and just believing in it and believing in what they were teaching me, it's played a tremendous part in my life. And my wife is also a ROTC product. We actually met on a deployment in Kuwait in 2007. And we've been together for about 18 years.
Well, congratulations.
Yeah.
So folk out there listening, joining the military has all kinds
of benefits.
We live in an age in America where, unfortunately, so many people in minority communities are dissuaded,
Mm-hmm.
disappointed,
Mm-hmm.
and to somewhat disillusioned
Mm-hmm.
about business.
Mm-hmm.
What gives you your greatest hope from the perspective of what you do and how you see the future?
Sometimes when we give a company a bond, it's amazing how emotional some people get sometimes. So that keeps the fire in us, knowing that we're actually changing lives, and it happens a lot because unfortunately, too many people are put in position where they need a bond and they can't get it, and when they come to us, we're able to get them a bond, and I've seen grown men cry on the phone and on Teams meetings, just thanking us for giving them a bond that they've been trying to get for a couple of weeks, and it was down to the last day or whatever it is. So I think just getting the thank you from the people that we're working with, it's been great.
Peter Gibbs.
Yes, sir.
Thank you for being with us on how to get your money right.
Glad to be here. Thank you so much.